Anand Tandon joins in to talk about how markets might shape up from here. Anand, morning. Do you think it might aid sentiment at all, this news of Osama's death?
Possibly for the near term. Longer term, I'm not sure that it means much. I'm sure there are various other players in that organization who will take up the mantle. I don't see that problem running away just because of one person. But that said, in the near term, I would imagine that there is some cause for celebration.
How are you feeling about earnings so far, Anand? How's that gone down for you?
Nothing exceptional right now. Whatever we can see from the numbers that have been reported, bar cement, I think, which clearly did better than expectations of analysts. That said, cement valuations are not cheap, but even then the results have been better than perhaps expectations. As a sector, I don't see any other sector giving you a major cause for celebration. They have not been too bad either. I mean, to some extent, you're more or less in the range that you would expect from the estimates. But broadly, there is clearly now some pressure on margins. And even on the demand side, I think you're beginning to find that some of the sectors that have done well in the last 12 months or so, especially auto, are now showing some signs of inventory build-up at the stockist level. So again, those are issues which one has to keep in mind.
There is a policy meeting tomorrow, Anand, and for the first time in many, opinion actually seems split between 25 and 50. If the Reserve Bank moves with the 50 whips action, how do you think the equity market will read it?
I think if they move anything less than 50, it would be taken as a major positive. If it is 50, I would imagine that more or less the market will remain where it is. We still have the strange situation where inflation is higher than the long-term interest rates of government bonds. So the bond market seems to be fairly sanguine, and the equity market right now is not necessarily responding to these cues. So overall, I would imagine that unless the bank pulls a surprise and does more than 50, I don't think there will be any negative reaction from the market.
What's your sense of where the market is now, Anand? Given the macro and the micro, how is risk-reward positioned?
But then the market is not responding to most of the factors that you would look at from the macro level. It is also not responding to most of the negatives that one is seeing on in terms of policy or geopolitical effects and so on. So there is amazing strength. At the same time, when one looks at the business, I don't see retail participation increasing in any significant way. I don't see HNI participation in the market in any significant way. So to that extent, it also tells you that the market doesn't have that much to fall. On the other hand, what will take it up? So we are still in a rising interest rate scenario, albeit we are still having negative real interest. And we have a scenario where global flows may not continue to come into India. We've just had a large chunk coming in over the last 2 months, and therefore incrementally it may come down to more steady rate levels. So, and May traditionally has been a month which has been tough for most markets. So, if you put all of that together, I think by and large you're looking at a market which will have no significant direction.
Anand, where do you stand on banks, where it seems like they're going through a bit of a cyclical bad patch, and the worry is both on margins and of course on asset quality for some of these public sector names?
Well, actually we have RBI again extending the ability of banks to not provide for NPAs. So therefore, if you don't have to provide for NPAs, profits are there, losses are ours. There is not much that is negative on the banks except for this new paper that RBI has floated, where they are saying that they would look to deregulate savings rate. The beneficiaries there would clearly have to be the smaller private sector banks, because most of the old private sector banks also are those which have fairly high levels of CASA, so they are not going to benefit out of that. What is driving that need to deregulate savings rates? Presumably the fact that the NIMs are higher than RBI wants them to be. So banks are not passing on the benefits of the fact that they are still borrowing cheaper to the borrowers. Therefore, the results have been not so great for the smaller banks. But at the same time, if the interest rates remain in the range where we are, and the consumer demand continues to be approximately in this area, and you don't have to provide for NPAs in an incremental form, banks will kind of remain in this area. Most of the public sector names are in the 1.5 kind of price to book 1 year out. That doesn't make them very expensive. Can they go down? Yes, they can. But is there a trigger for them to immediately fall? Except for the savings rate deregulation, I don't see anything else.
Anand, what do you make of the changes at Infosys, and how do you see the stock moving now after the recent underperformance it's seen?
Well, I think both Infosys and Wipro are going through management restructuring of significant nature. Obviously, for Infosys, we have seen what we see at an all India level, which is that love for the family. The recent poll that one of the newspapers carried, where the employees said that they want only the promoters and founders to lead the company. But given Mr. Kamat's experience and his ability to set a very aggressive growth, what I would expect to see is that from here on, Infosys will be using its cash chest to actually go out and make acquisitions and try and set up much more aggressive growth numbers. Whether that will result in receivable positions or whether it will lead to quality of earnings deteriorating, I hope not, because this is not a bank and you cannot hide NPAs. But to that extent, one has to look out for the receivables. But aside from that, I don't see any issue in terms of the kind of growth that the new management should be able to chalk out. The environment in the US at least is significantly better than it was 12 months back. And the only joker in the pack obviously is the consistent attempt by the US Fed to devalue that currency. And you've now got Mr. Warren Buffett also adding himself to the argument, saying that the dollar will be declining. So that will obviously put some headwinds on the business. On a restructuring point of view, I think it's positive. It should provide a lot more aggression to the business. Whether the business itself needs to be valued at this level given the macro is a different question altogether.
As well. Anand, what kind of downside risk does this market have going for itself? Because even though there are so many headline risks, a lot of people feel that the downside risk for this market is limited.
Mitali, that is the problem that we are facing. I mean, if I were to just paraphrase this, the fundamental view, at least for me, is negative. There is, we've said this many times before, higher interest rates, lower margins, slowdown in growth, and a geopolitical situation which is very weak, and a government which is more or less lame duck for the moment. Nothing gives you a fundamental reason for the market to go up. That said, when you start looking at the prices, they are not showing that kind of weakness that you would have expected to see. So the banana cake put is working, and given that they have just announced that they will continue to keep interest rates soft, I don't see any reason for it to move up, for it to go away anytime soon. And you've seen that.
Hold that thought, Anand, because here is President Obama probably saying that Osama is dead.